don't want to create two businesses and then sink both ships.
You're listening to the BulkLoads podcast, your number one resource for everything bulk freight trucking. And this is episode 246.
Hey guys, Jared Flynn with the BulkLoads podcast. Got Tyler here with me.
What's going on?
Oh man, things are rocking and rolling.
Yeah.
I think April is finally starting to pick up.
Yeah.
So
definitely ready for the summer weather to roll in and barbecues and fish fries and all that good stuff.
yeah, it's well underway, man, and kids will be out of school before we know it. But today's podcast, I think we're going to get a lot of listens on this one. We typically do with Padgett, and we typically do on this subject. But I want to give a disclaimer first. You know, you probably saw this title, and you're like, what is Jared doing? You know, we try to listen to feedback from our audience, and I know there are companies out there that are looking for expanding their operations. And we know a lot of successful trucking companies over the years, they've kind of expanded into the brokerage business. And we thought it'd be great to really dive in and talk about the step-by-step process if a company would like to get set up as a brokerage. And more importantly, kind of one of the things not to do. Like, you can't combine it with your business. And Padgett's going to talk about that today. But yeah, we bring on returning guest Padgett Smith and Larry Hurt, our CEO with Bulk Insurance Group, to kind of give perspective. Obviously, you know Padgett and her role with the permit shop and everything compliance-wise. Her team, they can get you set up with Brokerage Authority. They can get you all the steps, everything you need to know. Larry, also on the bulk insurance side, we can actually get you insurance as well, brokerage insurance. So they're going to lay out a step-by-step process from A to Z if you want to add a brokerage component to your trucking outfit. Again, we know that this isn't a fit for everyone, but we do know a lot of people think about that.
Yep.
And we want to provide the information for people on how to do that if you are interested. I know companies, they've done very well with it, and I know companies that haven't done well with it. So they're going to lay out those steps today. So with that said, here's my conversation with Padgett Smith and Larry Hurt. Padgett and Larry, thanks for coming on again.
Yes, thanks for having me.
Yeah, thanks for having us.
Well, Padgett, you're a returning guest, and I have to say, the podcasts we do with you are some of our highest downloads, and I think what you bring, people want to listen to. On especially, I think, and we know this, anytime we talk legal stuff, and especially DOT stuff, there's a lot of confusion, a lot of education that needs to be done out there. So I think you do a tremendous job of bringing that on. So I wanted to bring you on for this topic because I think this one's going to be really good, and I think it's going to get a record number of downloads. And then Larry, like you guys know Larry, but I think there's a big piece of this from the insurance that we're going to speak on. But Larry worked as a freight broker, the largest freight brokerage before doing insurance. So I think he can speak a lot of this on this as well.
Yeah,
so,
absolutely.
Cool. Well, let's just jump into let's start at A and see how far we can get to Z. But we've heard, right now volumes are down. Truckers are out there looking at different options. Some people are looking at maybe the option of becoming a freight broker. So they have their trucking authority, but maybe there's additional business that they can gain by becoming a broker and brokering different loads, or gaining more business maybe from a customer, running some of that through their entity, but then also brokering some of that out. So I think that's the topic we want to get on, is what's the process to become a freight broker. So Padgett, I'm going to kick it over to you first. Say I have my authority out there, I'm a 1, 2, 3 truck operation, have my trucking authority. I want to take the next step to become a freight broker. What do I need to do from the DOT standpoint?
Well, I'm going to recommend that you set up a new DOT that keeps the waters from being muddy. So you would set up a new DOT number and you would apply for a broker authority, which is different than the motor carrier. And Larry could probably attest to this on the insurance side, that it's really hard to split the hairs as to where the liability goes if you put it all underneath the same DOT. can be done, I don't recommend that. I recommend setting it up completely separate.
I always thought it was, and I don't want to use the word illegal, but I thought you couldn't do that. I thought if it was a brokerage, they have to run as separate entities.
Well, they can do it, but then they run into trouble on the insurance side because the insurance side doesn't know which side they're insuring, if it's the broker side or if it's the motor carrier. Because on the motor carrier side, you have the trucks that are hauling the freight. The brokers are not touching the freight. So it's hard for an insurance side to know where that liability is to lie. So where it can be done, I don't recommend it because you'll hit the roadblock on the insurance side and they'll tell you to go back out and do it the correct way, which is getting a new DOT.
You're absolutely correct. I think we're seeing more and more underwriters getting pickier and pickier. You may see some old truckers with their broker authority. Maybe if they've been doing it a long time, they have it set up like that. Maybe they've been with an underwriter a long time that understands their business. For new brokers, it is not recommended to put it with your current motor carrier DOT number. As you guys already know, attorneys are casting really broad nets. And so the idea there is that we want to separate DOT number, separate entity. Underwriters will go even and look if there's any common ownership. They'll also look at if the address is the same as a motor carrier versus the broker.
Well, and I think I was going to actually just ask that because I think sometimes I've even heard where people have to set up whole separate offices with a different PO box or different mailing address for their brokerage compared to where their trucking entity is.
Yep, and that's where they want to, they're trying to eliminate any gray area in the terms of a lawsuit. So right now, what we're seeing from an insurance perspective is attorneys are bringing brokers into lawsuits, and where the underwriter, what they're trying to do is determine, are we liable for the brokerage or are we liable for the motor carrier? And so if any type of separation that we can provide is good.
Okay, cool. Well, Padgett, I'll pass it back over to you. So apply for the authority.
So you apply for a new DOT. We apply for the broker authority, which you're still going to wait the 21 days. You are required, though, on the broker side to have a surety bond, which is the $75,000.
And let's stop right there. So the surety bond, explain what that is and where do you obtain that?
Well, you could obtain it through the permit shop if you set up your broker authority with us.
Okay.
And I mean, there are a lot of insurance carriers out there that will offer bonds.
So insurance agencies will carry that too, where you can purchase a surety bond.
Yeah.
Okay.
Yep, absolutely. And I'll say it for the bulk insurance side right now, we're just sending everything over to the permit shop. So that would be our recommendation. They got their process dialed in and they do a really good job with it.
And for someone, we hear bonds but for someone that doesn't know, in layman's terms, what is a surety bond?
You're just ensuring on the FMCSA side that you have bonded for the $75,000, which is the requirement. You can't get a broker authority without one. So whether we supply the bond or an insurance, carrier supplies the bond, the authority will not go active until that bond is filed with FMCSA.
Because isn't the main reason for that, though, say a broker does not pay for a load that a carrier transports for them, the carrier can then go
against that bond.
That bond to collect money on payment.
Yes.
And I'm sure that's a lot harder.
It is a lot harder,
but
that's the point of having that surety bond. And I mean, in my experience, I don't get to see that backside of it. So if someone's broker authority is having to kick in that surety bond, I wouldn't see that just because I'm not the bond company. Although I issue bonds, the bonds I'm not, that's not done in my office. So that's done with the bond company. But after the bond is obtained, you're also required to have what is called the BOC3, which if you're on the motor carrier side, you are already familiar with the blanket of coverage is what they call it. And it is required. Those are the two requirements that FMCSA puts on a broker authority is that $75,000 surety bond, and then you have to have that BOC3 filed. And just to clarify what the BOC3 is these companies designate a process agent in every state. So like I'm a process agent here in Missouri. If one of my clients was to be served by an attorney and they cannot get to my client, they will serve me on behalf. That's what a process agent is.
Okay.
And there is one designated in every state. So if one of my clients is in Colorado, but they're domiciled in Missouri, well, they can't get to Missouri. They're going to serve that process agent in Colorado, and then it will trickle down back to that carrier. So it's required, and I mean we do a lot of BOC3s in addition when we set up the motor carrier or the broker authorities. So those are two requirements that you have to have, and then you have the 21-day wait period. That is an FMCSA, that it's that long before they will make that authority active to be able to broker freight.
We don't have to talk about specifics, but like just cost. If someone's thinking about this and they want to go through this process, like what's a general number that they're going to spend between all this, just on your side, and then I'm going to ask Larry on the insurance side.
Sure. Well, of course, you're going to have to pay FMCSA the $300 of the required fees. And that is, you can't get away from not paying the $300. The broker bond is going to be based off of your credit. That they look at your credit and then they base how much they're going to charge you on that bond. So I can't really say what the bond would be.
I'm throwing a number out here because I remember one time I was looking into this, not for us, but like how much does that cost to have like a $75,000? Because it got raised not too long ago. When I say not long ago, it was like 5 or 6 years ago, because it used to be, I think it was maybe 25 or 50,000, but they passed legislation to move it to 75,000, and there was a lot of uproar on how much that was going to cost. But like, don't quote me on this, my listeners, but I was thinking like a $75,000 bond, surety bond, was going to be around $2,500.
No.
A lot more than that?
No.
A lot less?
Yeah.
Okay. So I got
a lot less than that.
Okay.
Yeah. But again, it's hard for me to say what it would be exactly, but I don't have a $2,500. I mean, I don't have a single client that I've ever had those rates on a bond.
What would you say ballpark though? I mean, and again, it's going to range on credit and all that, but are you thinking like 500?
I mean, it could be anywhere 500 to 1,000.
Okay.
I mean, it's a lot lower than what people think. I mean, they start to balk when they see the $75,000 bond.
Yeah, they think they got to put up 75,000, and that's not the case.
That is not the case. So, and it is most of the bond company that I work with, they're yearly bonds, and they're continuous until they're canceled. So as long as you're paying the premium on that bond, then they just continue on, and we just renew them. But I've seen some of them that are 14 to 1,700. And they do, and I have seen them renewed a couple this year that went down, that you may get a couple of years at that higher rate, so to speak. But then once you've had that authority in place for a couple of years, those rates are going down. So that, but it is a recurring, you have to keep that bond current. So you would have that fee every year. The process agents, or the BOC3, the company that I currently use is DOT Process Agents, and you don't have to renew that every year. So you pay for that, and I think I'm charging $85 in my office now to obtain a BOC3, and then of course we would have our labor. So you could roughly, I mean, now maybe $2,500 total, but that would encompass the bond, then obtaining the DOT along with the broker authority. I mean, you would probably be in that $2,500 total range, but not just for the bond itself. Now, as I say that, don't quote me on that, because if you come in and your credit's not great, I mean, that bond may be a little more expensive on the front end.
Right.
But,
I'm just again throwing out ballparks just to kind of think, so we can kind of figure that total range. So that's all of those expenses. You have to have insurance. And Larry, let's talk about the type of insurance and then kind of what those premiums usually range.
I think just to back up real quick, I think what this is really interesting, because think about the barrier to entry to become a broker versus a motor carrier.
Yeah.
I mean, you can get set up and become a legitimate broker. You probably already have some relationships in the industry, and you're looking at, all-in costs just to get the entity started for under $3,000.
Yeah. Well, I think that's why people, and I don't want to go down this rabbit hole, but people have concerns or frown upon that, because a lot of our motor carriers and listeners to this podcast, I mean, they're spending, several hundreds of thousands of dollars in equipment to get set up for their company versus someone that could be under $5,000 maybe.
Yeah,
you know,
and so
just
if you
to
just look at the numbers, I mean, yeah, of course, being a broker, I mean, it looks attractive to get going. I mean, low barrier to entry. We've seen we've seen more brokers. Lately, it seems like more people are wanting to look at becoming a broker.
motor carriers wanting to become a broker.
Yeah, motor
or add it
carriers,
to their.
or other people's branching off from who work with big brokers, and now they want to go start their own.
Okay.
We're seeing both of that in the marketplace, and obviously, I think for obvious reasons, the barrier to entry is one of the biggest reasons. On the insurance standpoint, this is it's completely different than motor carrier insurance. The insurance brokers carries what's called contingent coverages. These coverages are contingent on the motor carrier that you hire as insurance. So in the event where you hire a motor carrier to move a load for you, if there was a third-party claim where your motor carrier was negligent, essentially you would want coverage for your brokerage to pick up any negligence from that motor carrier if their policy became lapsed or canceled when that load was being transported on your behalf. And so we call that, there's two main coverages. There's your contingent auto liability.
Yep.
And your contingent cargo. And so what we look to do for guys that are getting set up, there's a few markets that will write these for new venture brokers. Typically in the ballpark terms of pricing, we're seeing right around $7,500 for an annual policy. That's more expensive than the previous few years that we've done it. And there's a lot of variety of what goes into basing that premium. They're going to base it off your gross revenue numbers that you project at the beginning of your policy period. At the end of that policy period, they're going to look to do an audit of your final gross revenue numbers, and that's where they're going to base the premium off it. So a lot of our guys, they'll estimate they're going to do 500 loads, and they're going to estimate that they're going to do $1 million of gross receipts for the year. That's how we get to that premium, the initial premium. If they do less than that at audit, you would expect the insurance company to give you a check or a refund back. If you do more than what you projected, you would need to pay the difference as well. And so we always want to make sure everyone understands this is a baseline. At the end of the policy period, the insurance company is going to charge you actual premium based on actual dollar value gross premium.
That's interesting. So there, you actually pretty much have to show them your financials on how much volume that you're running through.
And that's how they're calculating exposure, right? They're saying this is how much we've been exposed to claims. Here's the amount of money that we need to collect in order to be profitable in the insuring agreement. So I'll say this too, and this goes back to another conversation we had. A lot of shippers are the ones that are bringing this to these brokers' doorstep. In the past, for brokers, contingent coverages are not federally required.
Right.
And so there becomes this game of who's going to be sued. And now times a lot of shippers are the one that actually are starting that conversation with brokers.
Well, I remember when back in the day when I was a shipper working at Bartlett, we required everyone that hauled had to have insurance. What a broker would apply to haul for us, and they didn't have insurance. They're like, well, we're the broker. We don't have insurance, and we couldn't hire them. They had to have insurance. So some of these, they did have to go out and get contingent cargo and liability coverage to prove that they have backup insurance on whatever motor carrier that they hire.
Yep. And so shippers are bringing that fight to the doorstep of the broker.
Well, I was going to mention, we talked to several companies at our bulk freight conference a couple months ago that mentioned that their premiums were going up, because I remember having conversations with you and a couple that they were looking to shop that around just because it is, or it does seem to keep increasing each year.
We're seeing more brokers being brought into lawsuit when there is a claim from a motor carrier. And so with that, obviously, insurance companies have the duty to defend their insured. And so their premiums have gone up as a result of more litigation.
Can we touch on that? Because I think that's important to bring up. If you do decide to become a broker or brokerage, the liability that is involved. And today we are seeing lawsuits where brokers are getting roped in and deemed liable in some cases. I mean, your old company, C.H. Robinson, there was one this year. I mean, you hear it now more and often. Again, they deal with such volume, but they were at fault. But maybe touch base, and again, this isn't your expertise, Larry, but I think a lot they want to make sure that brokers are hiring good trucking companies, right?
Oh, absolutely. If when we're working with brokers, one of the first thing we ask for, first pieces of data, is your broker carrier agreement. We got to see it. A lot of our underwriters are now asking for them, and they're making legal recommendations on how to manage that, because what's happening is, when you hire a motor carrier, you're essentially saying that, hey, this guy's trustworthy. And if it comes to the light that maybe his insurance has lapsed, or maybe that motor carrier is hiring negligent drivers, and one of his negligent drivers ends up in a wreck and hurting somebody, that broker is going to be pulled into that lawsuit if they were knowingly and willingly involved in the movement of that cargo being transported with a negligent person at the wheel.
So, and Padgett, you might touch on if you have any knowledge on this, but if you do decide to become a broker, make sure that you have some hiring practices in place. I know, some practices. You talk about the broker carrier agreement that's signed. I think a lot of people also use other websites like Carrier 411 or other ones to look at safe stat scores and make sure that the company that they're hiring doesn't have a lot of violations. But I think, again, who knows what would happen in a court of law and who's going to be at fault. But I think your job is to make sure that you're protecting as much as possible. So if that does happen, you can show that you did everything you could to hire a good company.
Yeah, I would agree with that. I think that what you don't want is you got a hot load and you're a broker and it needs to get moved, and so you make a few calls and you hire a guy that you don't know very well to move that load, and you look at his FMCSA and it looks like he's got insurance, but you don't collect a certificate, you don't do any background on the guy, and you could be exposing yourself to a large claim and being brought into it. So we always recommend a program. I mean, technology has changed the game, right?
Yeah.
We can automate. There's, like you mentioned, there's Safer Watch, Carrier 401, My Carrier Packet. These are all products that we would recommend brokers signing up with. And a lot of times underwriters want to also see that they're signing up with that. And that's just a certificate management system to make sure that when insurance is canceled or elapsed, they're getting automatically notified via their inbox, email or an alert from one of these systems saying, hey, this motor carrier who you have signed up to haul for you no longer has insurance, or their insurance is coming up for renewal. Let's make sure we get an updated certificate.
Anything you want to add, Padgett, as far as like violations or?
I would just say if, some of these carriers are entertaining going and getting their broker authority and maybe they're wanting their own trucks to haul them, that those same provisions that you just described, Larry, also need to be in place. You don't want to create two businesses and then sink both ships because you didn't do the due diligence to put that carrier agreement in place with the brokerage side, because you would need to treat that as any other carrier out there. And if you're using your own trucks, that doesn't mean you get away with doing the due diligence of protecting both in that case, because that it's essentially could be the same person, and now you've got the motor carrier exposure and the brokerage exposure, and you want to protect both. So
yeah, that's a good point.
I would encourage to follow that same line of thought that Larry just brought up about if it's an outside carrier, to making sure that you have your I's dotted and your T's crossed, because this is life that we all get to play at. So
yeah, that's good. I'll say one more thing about that too is, a lot of in the underwriting phase, when you're working on your broker insurance, they'll ask, do you have an associated motor carrier DOT?
Oh, okay. I didn't know that.
That's a question that's on every application. We always, if that is the case, we always disclose it. We want to get out in front of it. Your broker contingent coverages will not respond when you broker a load to your associated DOT number. So what that's saying is these underwriters are saying, we're not going to provide coverage for your other entity, even though it's a separate entity. When you broker to yourself, we're not going to provide coverage because we are operating under the assumption that your own motor carrier should be up to par with their insurance. And so they'll ask a percentage, how many percentage of your loads are brokered to your your DOT number or motor carrier number on your separate entity. And so a lot of times it'll be, 15, 20, 35% of all my brokered loads go to my own carrier. And then they will subtract that out when they look at the exposure on collecting premium.
Well, and FMCSA also asks that same question. It's not worded the same, but they want to know if you have an association with another number. But on the FMCSA side, there are a multitude of reasons why they're doing it. The reincarnation is one, and so everybody's trying to cover their bases on everything. So there is the right way and the wrong way, and sometimes even the ones who do it right still can get pulled into the litigations.
Yep.
So
You hear often in some of these companies that say they have a big shipping account that they're getting, a couple hundred loads, just use an example. I've heard it said where they will, they have a brokerage. So the brokerage will take all of those loads, and then the brokerage gives so much of it to the trucking company, and then whatever's left over or whatever else, then they broker out to other authorities as well.
Yep.
And it seems like not all, but I hear that more often as some of these companies, because they get in good relationships with a large shipping company, especially in our industry, maybe a big processor or ethanol plant or something where they're supplying a huge amount of loads. Well, they want to try to handle all that, but they don't have the trucks to do it or to ramp up as many trucks. So they start that brokerage authority that then handles all of that freight.
Yep. Yeah, I think that's entirely, reasonable. It seems logical. From an insurance perspective, I don't think underwriters would have a problem with that. What it really comes down to is like what Padgett brought up, the safety resources that you're implementing on your broker side. So yeah, I think I'd like to explore that more, because I think that's something that's becoming more and more common. Is, you got a shipper, you don't want to turn down freight. Maybe you have a really good relationship and can produce a lot of revenue for your company. Let's look at the best
capacity.
Well, at the same time, that one shipper, usually it's one transportation professional that's got 300 loads to try to get covered.
Yeah.
He wants to find one person, or I should say one company, to take it all, or as much as possible instead of a bunch. And I say this, and that may be painful for small owner operators to hear, but you just got to learn from their side. That's kind of the way they're looking at it. They don't have enough time in the day to give every single load out to an individual owner operator. I would love it to be that way, and I think you could argue the fairness of that for that, but the way it's done, and I worked as a shipper, man, but stuff had to move, and we had to get it moved. We had to find out. I was the only one doing it. I had to maximize and give so much out to somebody that then could probably give it out to other companies. And it's just the way the system worked.
Yeah, I think for the owner-op side of things, I think that how important it is to find a broker that you trust, that you're going to haul for. If I was an owner-operator, I'd be like, well, who's my 3 brokers that I know that I can trust these guys? Mm-hmm. And then I'm going to work my butt off for them. And I think that through that, there could be a lot of relational equity that goes into it, and hopefully a lot of money that they make doing it.
Yeah. The last thing I was going to end, and this is just kind of roping back, but again, really keeping things separate. If you're going to do this, making sure even separate bank accounts, separate, that way, the money, because if something does happen, it's not showing that these entities are closely tied together.
Well, that's just good business.
Good business. Yeah.
And that's.
But I think you just got to remember, if you're thinking about this, that's just another thing to be thinking about, that you got to have other accounts which require additional support and additional resources as well.
Correct. Yeah. I would say the same. And we would, if any of the listeners were to call into our office, we would recommend the same thing of, yes, you may have the motor carrier side, but you're going to start up a brokerage, you need a completely separate entity.
Yeah.
Yeah.
Very cool. Well, I'm going to give my final thoughts, and I'll just kind of want to pass it around to you all, and then we'll close out of here. But again, from the bottom of my heart, I wanted our listeners to hear this, because I know it's tough out there, and sometimes we can look and point fingers, and there are bad apples out there. I want to say that as a matter of fact. But my goal, and I think our goal as a company here, an umbrella of companies at BulkLoads, is to really give transparency and truth of what's going out there. And if someone wants to look at other options and expand their business, we want to be there to help them along the way. We are for trucking companies. We're for brokers. We're for shippers. We want to see everybody work together in an honest, good, faithful manner that we can all benefit from. And I just always want to use as a disclaimer. I think sometimes when shows like this, they can be perceived wrong. I may get some flack out there, but I want to stand up and make sure that we're doing this to help people in the industry and really shed light. And hopefully someone out there, you may be listening to this and may say, hey, I want to take the next step, or maybe I was thinking about that. I think that's a good idea. Or, man, I was thinking about that, but that probably doesn't fit what I want to do with my business or model with my business and life. But that is my final thoughts. Larry, I'll pass it over to you.
Yeah, I think that's. I think you're exactly right. I think our goal, especially for bulk insurance, is just to advise you guys. There's lots of listeners out there. I came from the freight brokerage industry. That's where I gained my love for transportation, and there was really positive takeaways from my time at C.H. Robinson, and some really negative takeaways. I think the best, most positive was that there are really good motor carriers out there.
Yep.
Guys that are really solid, that love their business, that love their shippers, that love their brokers, and that would bend over backwards for you. We need to find those guys, and we also need to be those guys on the brokerage side. We need more brokers to step up and act that way. And they're out there as well. There's some awesome brokers out there that treat their motor carriers with respect and dignity and transparency. And that the hope is that we all work together to do better for our industry. And I think at BulkLoads, that's something that's a huge takeaway for me and Bulk Insurance Group is call us. Let's talk about it. Like if we can find a solution for you, it doesn't matter if we're making money on it. What matters is that we're providing an outlet for the transportation industry to collaborate. And that's what gets me excited. And I think that's what gets all of us excited.
That's awesome. Padgett?
Yeah, being at the permit shop and being a service provider, I'm not directly in contact with the shippers. I am in contact though with the motor carriers. That is the side that we get to be a service provider for. And in this game, we all want to win. But just because maybe in this podcast we made it might appear to be easy for entry, and there might not be a lot of cost, there's always a cost associated with it. And you might go through all of the cost and it might not work out just like you thought. And, especially for these, 10 and under 10 trucks and under owner operators, or maybe they have just that small fleet. It goes back to what you had said, Jared, on the shipper side of, do they have enough capacity? And who are they going to team up with other motor carriers? And so, yes, it might appear that it's super easy to get into, but there's always going to be a cost associated with it, which, it's a whole different lane.
Yep.
And so, at the permit shop, that's what we do. We will provide that service if that's what the route that they want to go, but we don't get that direct contact with the shipper, so we don't have a place to send them. We can just get them set up. So
you got a little punny when you said lane.
Yeah.
You got it. No, that was good. So awesome. Larry, Padgett, thank you so much for coming on the show and on this rainy day here in Missouri. But man, thanks for the insight.
Absolutely. Thanks for having me on again.
I love the steps that they mentioned, and it's not as cheap as you think it is to get set up with Brokerage Authority. It's not near the cost of a trucking operation, so I want to make that clear. But there are still a lot of steps to get set up with getting your authority, getting your surety bond, your BOC3, the wait period. So there are some aspects to that, but I think most importantly, how to make sure you structure it the right way, that, it's not embedded with your trucking outfit, that it's a separate entity and it runs as a separate entity.
Yeah. And like you said, we've heard a lot of people, talking on our forums or Facebook or whatever it is that, and they may be joking, I want to add a brokerage to my business, or I'm going to start brokering and stuff like that. But there are actually guys that want to do that with their businesses.
Yeah.
I think having Padgett on here explaining the step-by-step of how to do that just provides education to do that.
And I may get some mud slung my way for this, but I think the goal is to give information out there for those that are really interested in this and that can expand their business into the brokerage spot, because there may be some of those out there that have clients that have more loads that they want to offer out, and maybe the only way to do that is to expand your trucking outfit to add that element of brokerage where you can do that in a legal way. So again, we'll put Padgett's information in the notes here. Obviously, you know how to get a hold of us for Larry. But yeah, broker insurance, even if you're an existing brokerage out there, we would love to quote you on the coverage for broker insurance and just insurance as well for that.
Yeah, and we do actually have a form on our insurance tab on BulkLoads. You can now select a broker tab. If you're interested in broker insurance, you can just fill out that little form, and then one of our guys will contact you on that, or you can do it through the Bulk Insurance website at bulkinsurancegroup.com.
Awesome. Cool. Well, thank you as always for listening to the BulkLoads podcast. Again, if you know someone that might benefit from this, please share it with them. Man, we appreciate a review too, just to let us know how we are doing. And thank you very much. God bless.